Understand that below 28.50, there's probably physical demand beginning to build up, and there's buying above $32. So below the yellow line, it will get bought. And above the green line, it will get bought. Silver is in catch up to gold mode now. If we can survive the selling that's coming into gold right now through this whole buy season cycle, believe it or not, there's selling in buy season, then this market's going to go higher. Move to a weekly. The market is midway through actually the market is bullish and tentative. So again, above 32.50, and this signal will rip.
Silver has extended its pullback below $32 during Monday's European session, weakening as U.S. bond yields rise. This pressure comes after the chances of the Federal Reserve delivering a larger-than-expected 50 basis point interest rate cut in November were removed. The white metal, which has recently surged to its highest levels in over a decade, is now facing a critical test after its latest rally. Silver ended its most recent session despite these challenges at $32.20, posting a daily gain of 0.54%. With a 36% rally year-to-date, silver remains one of 2024's top-performing assets, attracting significant attention from investors and traders alike. However, some caution that the metal's next move will determine whether this upward trend can continue. Veteran commodities trader and market strategist VinceLanci, who has over 30 years of experience in precious metals, including gold and silver, offers insight into the current market dynamics. Lanci points out that silver is currently in catch-up mode with gold, and while the metal may appear slightly overbought on the daily chart, the longer-term trend remains bullish. Keep an eye on the $32.50 level, a technical resistance point. If broken, it could signal a significant rally. Silver has struggled to surpass this level and may experience volatility in the short term. If it can push past $32.50, a more substantial rally could be in store, as the long-term fundamentals for silver remain positive. Until then, the market will likely hover around this crucial price point, preparing for its next move. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
There's a bullion bank, their name is in the report. Most of their clients are gold focused, and they're now introducing their clients have silver as well, but they're now introducing their clients more aggressively to silver. And let me just read that to you. Our trade of the week focuses on silver and lower nominal and real rates and the prospect of greater ETF inflows. Here's the chart they associate with it. Now, I'm going to read a little bit from the report, and then we'll go into what it means a little bit. Since the 2Q run-up in silver prices, the metal has lacked a clear trend. We believe its recent sideways trajectory will turn into a broader uptrend, with silver prices breaking out of their recent 26 to 32 range and rallying. Rate cuts and policy easing across the globe should underpin economic growth and industrial application demand for silver. At the same time, lower real rates set at the scene for a weaker U.S. dollar and ETF demand coming out of the U.S. and Europe. Our silver forecasts stand at $36 to $38 by the end of the year. Our longer tenors also match those forecasts, meaning they don't see any let up anytime soon. Now, what is this chart? This chart has a red line in it. Let me bring it up on our screen here. They believe that the market won't get below 26, period. They also believe that it won't get much below 28.50. And so they're advising to their clients to get bullish now by betting it won't go below 28.50. And that would be involving selling derivatives. Now, as a trader, you may say, that's risky. I might do that, but that's just a trade. And as a stacker, you may say, who cares? That's crazy. I'm not going to do it. I'm just going to stack. And I'm saying to you, it's important information because their clients are the wealthiest individuals and pensions in the world. And they're not idiots selling puts because they think it's going to go up. They're deep-pocketed people that if it does go down to 28.50, they will take delivery. So understand that below 28.50, there's probably physical demand beginning to build up, and there's buying above $32. It will get bought. Silver is in catch-up to gold mode now. If we can survive the selling that's coming into gold right now through this whole buy season cycle, believe it or not, there's selling in buy season, then this market's going to go higher. Now, just to zoom out just a little bit, rather zoom in a little bit. This is the daily silver chart. This is my opinion based on the analysis. The market is a little overbought and it needs to work off being overbought for the next 1 to 5 days. It doesn't need to work off being overbought. If it gets above that line, it's just going to go. Okay. But if it stays under that line and hovers in this area, it's building up, it's reloading the gun for another run higher. Move to a weekly, the market is midway through actually the market is bullish and tentative. So again, above 3250, and this signal will rip. And the monthly is in midstream. It's just in the middle of the market going up. So daily 1 to 5 days. Don't be depressed if the market goes sideways for a couple of days, because once it gets above 3250, it's going to go.
VinceLanci argues that the rise of BRICS challenges U.S. dominance by representing a significant portion of the global economy, with nuclear capabilities and a more unified approach. This shift has profoundly impacted markets, particularly gold, and signals a move towards a new Cold War-style environment reflected in commodity price movements. China's massive sell-off of U.S. treasuries significantly indicates this power shift. In 2024 alone, China has dumped over $21 billion in U.S. treasuries, including a record $53.3 billion in the first quarter. While third-quarter data has yet to be compiled, recent trends suggest another $5 to $10 billion could be added to this total by the end of the year. This is part of a broader trend that began in 2022, with China and other BRICS nations consistently offloading U.S. treasuries. This sell-off highlights BRICS nations' desire to distance themselves from U.S. assets in their reserves, driven by the increasing concerns over de-dollarization and rising inflation in the U.S. As the U.S. dollar faces challenges, more countries consider BRICS an alternative to avoid potential economic fallout tied to the U.S. currency. This trend underscores the growing influence of BRICS in reshaping global financial dynamics.
Right after 2020, right after COVID, it was like a line in the sand. Mind you, back then, Sunni and Shia weren't on such good speaking terms, so Iran was actually more of a threat than they are today. However, as I just said, that was supplanted by Chinese demand. The Chinese demand has grown, the need for the U.S. has decreased, and some U.S. dollars are being orphaned. Now, I know the U.S. dollar is doing fine against G7 countries, but don't tell that to gold. All right. The rise of the BRICS brings a superpower collectively to match up against the U.S. Now, I wouldn't call them literally a superpower because it's a cooperative, but you're seeing their effect everywhere. You're seeing that in the price of gold. Since COVID, we have now entered an era past the superpower dominance of the U.S. You can say that the BRICS are banding together in an almost attempt to be a unified cooperative superpower. But in many instances, they are. They have nuclear capability. They have a significant portion of the world economy. And at least for the moment, they are acting of one mind. And when that happened, the markets went back to Cold War behavior, back to the chart. After Russia-Ukraine war, gold was down, fine. But oil was up 18.5%. And the only reason it went down afterwards, back to unchanged, is because we emptied the SPR. Saudis didn't help us. That war wasn't in their backyard. Israeli-Hamas war. Gold, 3 months later, up 13%. Remember that day, October 7th, a year ago? Gold started a relentless rally and hasn't looked back since then. 6 months later, it's up 26%. Oil, initially down 6.9%. Maybe the Saudis were being kind to us. Who knows? But here we are 6 months later, and it's up 7.8%. We're in a Cold War again, based on the behavior that we're seeing right now in the markets. If the markets are polling devices for world geopolitical cooperation, then markets are discounting a new Cold War. It's that simple.
Silver's long-term outlook remains bullish as it faces short-term volatility, supported by solid fundamentals and growing investor interest. The rise of BRICS nations and their push to distance themselves from U.S. assets could further influence commodity markets, making precious metals like silver and gold even more attractive as safe haven investments. The following key move for silver will likely depend on whether it can break through crucial resistance levels, signaling a potential rally ahead. How do you see the shift in global economic power, particularly with the rise of BRICS nations, affecting the future of silver and gold markets? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.